this is Victor Antonio with another B2B sales insight. Today I want to talk a little bit about return on investment and circulating capital. When you look at any B2B scenario, what we're always concerned about as a manufacturer of a product and service we're trying to sell is how fast we can actually turn around that product, sell it, and actually get a profit or make a profit off of that. Now, what I want to do right now is just kind of walk through the actual turnover cycle of an actual product from beginning to end, from the time it's manufactured to the time it's actually sold, and the profits that we actually make on that product. So let's just, for the sake of example, talk about selling a Slinky. Let's say that that's the product we're selling. Now, in order to sell that Slinky, I first have to buy the raw material, in this case the aluminum bar that actually creates that. And after putting it through some labor, I can actually get my Slinky out. So we look at the cost of that, it'll be about $100, let's say. Now the $100 again includes the raw material and the labor used to produce that actual product. After some time, that product is finally sold at, let's say, $250. Now that raw material, that labor, that investment has now been converted into a sale or an account receivable at $250. So that's how much we've made so far. That's the top line sales of actually selling that product. We now then have to go ahead and subtract out the operating cost of our business. That also includes sales, general, and administration, which leaves us with a whopping $200 in total revenue. Now let's take a closer look at that $200. And notice that from the beginning to the end, we're going to call that the turnaround period or the turnover period, also known as velocity, which is how fast can I convert, let's say, my investment from raw material back into a profitable venture. In this case, let's just go ahead and break out the two costs. Now, at the bottom here, what we can do is take that same $100 we originally invested and invested right back into replacing that product we've just sold. In other words, replacement stock. We then have the option of the $100 profit that we made. That profit margin, we can either reinvest it into, let's say, more machinery or increased stock, or we can invest it in new opportunities. What I wanted to show here with this graph is that money basically moves through the system as fast as possible, allows people to actually make more money. So when we talk about return on investment, what we're talking about is really how can we actually increase the velocity. Now, there's several ways as salespeople we can impact the manufacturer. We can help them reduce their costs on the manufacturing side, or we can help them reduce their operating costs, let's say on the expense side, or one of the other things we can do is actually reduce or shorten the time it takes for them to produce the actual product. And if we can do that, if we shorten their velocity, their turnaround time or their turnover time, well, that just increases the amount of cash they have circulating. In other words, their cash flow increases if we can actually shorten that turnaround period. Now, having said that, if we can increase a company's profit margin by either lowering their operating costs or actually lowering their direct costs, and we can help them out with the velocity, the ability to turn around a product faster, then when we look at return on investment, it's really a function of profit margin and velocity. This is what business comes down to. So, in any given sales situation, one of the questions you have to ask yourself, where are you impacting the customer? Where can you help them get their return on investment? Is it going to be reducing their operating costs? Or will it be helping them reduce their direct cost? Or are you going to help them shorten that velocity, that turnaround cycle? Keep this in mind. Next time you go see a customer and you're trying to talk about as far as what your product or service can do for their business, emphasize what you're talking about. Are you talking about operating costs, direct costs, or turnover time in terms of product or service? This is Victor Antonio, and I just want to remind you that I have a new website and blog called Value Centric Selling. It's a new blog. Going to have some great information, mostly B2B stuff. Whether it's product or service, doesn't matter. So please take a look at it, and just remember, selling ain't hard when you know how. And always remember to sell the profit, not the product. This is Victor Antonio. Take care.